Frontline stocks take a breather, mid-caps fade after rallying in early trade. Energy stocks are prominent gainers even as IT and autos drag. SEBI's consultation paper proposes 2 expiry days in a week, Tuesday and Thursday, for all equity F&O contracts. The move nips in the bud the moves by exchanges to draw volumes via expiry scheduling and is in line with SEBI's aim to rein in excessive speculation. The BSE stock jumps in relief. Bharat Forge's Baba Kalyani sees little impact of uniform US tariff on business, expects India might gain an edge with ongoing negotiations. Samvardhana Motherson too expects little financial impact. Axis Bank's chief economist Neelkanth Mishra sees Trump's reciprocal tariff as the first salvo in an extended trade war that will reset the world order. He expects uncertainties to keep the markets in a turmoil. Hello, good afternoon. You've tuned into Business Lunch coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in. Today we're seeing a bit of a subduedness that has come into the market. As of now, the Nifty is trading in the red and we're seeing a bit of a fall from the day's highest point for the Nifty 50. 23,530 levels at 500 levels is what it's managing to hold on to. So let's keep an eye out on where it's going to be headed in the second half of the trading session. Mid and small cap, let's pull that up. The small cap and specifically seeing a bit of an outperformance versus the benchmark indices. So Nifty small cap is holding on to some bit of a gain. Nifty mid cap is also still on the better side versus the benchmark indices, down only 0.06%. We have the Nifty Bank that's seeing a fall as well in today's trading session. Nifty Bank is down almost 2/10 to 0.3% in today's trading session. What's holding on to some bit of a green today is the Nifty FMCG side. That's among the top sectoral gainers, 0.6% of gain for the Nifty FMCG. The big drag is the IT, Pharma as well as media, where we're seeing some bit of a pressure in today's trading session. Advance decline ratio is more in the favor of decline slightly as of now versus advances. So interesting to watch out for on that front. Individual names, a lot of names that are in focus. We'll talk about that through the show as well. BSE is something that we'll keep an eye out on. Other than that, some of these hospital names, so Aster DM Healthcare, Fortis Healthcare, that is something that is in focus and seen a good gain in today's trading session. So keep an eye out on these stocks as well. But let's get started with the story of the day that we could say after SEBI has proposed 2 expiry days in a week, Tuesday and Thursday, and this is for all F&O contracts. NSE has deferred its plan now to change the weekly expiry, and this has a positive rub-off effect on BSE. Mangalam is joining in with us to give us more details on this one. Mangalam, afternoon, and surely some bit of a positive sentiment coming in for BSE, right?
Well, indeed, BSE is actually the stock of the day, and here's the biggest reason why. You know, earlier there were fears of the volumes on expiry day going to NSE because the NSE had plans to shift its expiry day from Thursday to Monday. Remember, the BSE itself has its own Sensex expiry every Tuesday. So NSE's move from Thursday to Monday was, worrying the BSE shareholders because they thought this volume loss from derivatives could actually accrue to NSE itself. But now that has changed. Why is that? Because the NSE has gone ahead and deferred its plans to shift this expiry from Thursday to Monday. Why does that happen? Because the SEBI has gone ahead and actually put out a consultation paper suggesting that there would be expiries only on 2 days, which is Tuesday as well as Thursday, and any change on settlement days of all futures and options related contracts would have to go through by the SEBI itself. And BSE shareholders are rejoicing that largely because, the fear of potential market share loss and its impact on EPS could be as much as 12% as expected or estimated by Jefferies itself. Now that is not happening, there is a relief rally. Remember, the stock had been an underperformer earlier and now has retraced most of its losses. But Jefferies does believe that, going ahead with easing regulatory action, better performing markets and hopes of, market share, them gaining market share because of this could be higher and lead to re-rating as well. For now, they have a hold rating on the stock, but the stock well above their target price of 52.50 after today's move.
Absolutely, Mangalam. Thank you so much for that. But now let's go across to Yash, who's here to tell us on why SEBI had to come out with this draft circular. Yash, take us through those details.
Well, that's the important question, right? Why did SEBI had to intervene when it comes to this particular matter, and come out and say that there will only be 2 days when exchanges will be allowed to keep their expiry days. If you remember, very recently, just a few months ago, there was a lot of noise around excessive speculation trading, excessive F&O trading, and to cut that down, what SEBI had said is that every exchange would be allowed to only have one weekly expiry on one contract. The exchanges, of course, were free to choose the contract. For NSE, it could have been Nifty, Bank Nifty, Fin Nifty, but whatever the exchanges choose, only one day of the week there could be an expiry on that particular contract. What started happening, of course, the exchanges chose the contracts that they want to have an expiry on, but just to get the volume edge, both large exchanges, that is NSE and BSE, started to shift the expiry days before their competitor exchange, just to get that volume advantage, as I said. SEBI, of course, started noticing that, and another concern was SEBI was also that if new exchanges also propose another, expiry day, then there would be a situation where all 5 days of the week there would be a different expiry by a different exchange. Which practically means that you've gone back to the situation which SEBI had worked against. To avoid that kind of a scenario and situation, SEBI came out with its consultation paper yesterday saying that, both exchanges, NSE and BSE, will have to choose one day, either Tuesday or Thursday, to have the expiry on that particular day. Even if there are new exchanges who want to have another day as an expiry, it will have to be one of these 2 days, that is Tuesday or Thursday, but NSE and BSE can't have the same day. That is, both can't choose either Tuesday or Thursday. They'll have to choose one of the 2 days. What that does is that since it's the two ends of any particular trading week, it spaces out the expiry between the two exchanges without giving any unfair advantage to one particular exchange. Now, as we see it going forward, April will remain the same in terms of expiries for both exchanges, and this consultation paper is likely to be applicable starting the month of May.
Okay, surely keeping an eye out on that. Month of May is what we'll watch out for then, Yash. But do wait on with us, because the CEO of LIC also told CNBC TV18 that they were looking at acquisitions in the health insurance space, right? And sources are now telling us that there are 3 companies that could be on LIC's radar. Tell us more about these. Which are these 3 companies? What's the update there?
Well, that's correct. So the LIC CEO Siddhartha Mohanty recently had made a public statement saying that they'll be able to announce an acquisition in the health insurance market as soon as by the end of the current month, that is March 31st. What I've been given to understand is that LIC is in the process of running its due diligence when it comes to at least 3 companies. Which are these 3 companies? The first one is Manipal Cigna Health Insurance. The second one is a listed entity, Star Health Insurance. And the third one is Niva Bupa Health Insurance. What sources add to this is that at this point of time, the input is that Manipal Cigna Health Insurance is a front runner when it comes to the preferred choice for LIC when it comes to making this particular acquisition in the health insurance space. But no decision has been made just yet when it comes to finalizing the acquisition. 31st March was the deadline as indicated by the LIC CEO, but currently the input is that it could take longer as the due diligence process itself is taking a little longer. LIC, according to our sources, is looking to acquire anywhere about 30 to 45% stake in this health insurance company. And when it comes to synergies that the company is looking at, it is looking at synergies around growth, underwriting and claims experience, size, also cross-selling and agent culture. If you look at the shareholding pattern, Niva Bupa Singapore owns about 56% stake, Fettleton owns about 17.5% stake, Star Health, Rakesh Jhunjhunwala and family own 17% stake, Safe Crop Investments, they hold about 40% stake, and in Manipal Cigna Health Insurance, Manipal Group owns about 51% stake, Cigna owns about 49% stake. We've written to all parties involved in this particular transaction. Star Health has replied that they do not comment on market rumors and speculation, but they continue to explore opportunities, including a composite license to diversify offerings and expand beyond health insurance. Niva Bupa has said that the company's management is not aware of any such development. Manipal Cigna as well as LIC are yet to reply to CNBC TV18's query.
Okay, Yash, thank you so much for that, and hoping for more updates coming in on that front. But thank you so much for that. Let's move on and now talk about the public sector defense companies. BEL, HCL are buzzing in trade today. Upasana is here to tell us why are they buzzing in trade. What is the reason for this? Upasana, good afternoon.
Good afternoon, Vinny. First up, let me start with BEL. The company is marching towards its 25,000 crore order inflow guidance for FY25 in the month of March. Now, company gets additional orders worth 1,385 crores since March of 12th, and with this, the company's total order inflow in FY25 so far stands at 18,400 crore versus 25,000 crore as guided by the company, which is a gap of nearly about 6,600 crore. Now, it will be important to watch out if in the remaining days, company is able to announce these additional orders in order to meet its FY25 order inflow guidance. So, we'll be closely watching out for that. Earlier, remember, company had reiterated that the order finalization worth 12,000 crores is expected by 31st of March 2025. Now, next up is HCL. This stock continues to remain in focus this week. Now, company has signed an amendment to LCA Mk1A contract to Indian Air Defence. The value of this contract has been upward revision from 5,989 crore to 6,542 crore on account of revision in the delivery schedule. Now, mind you, this week, that is on 26th of March, there was a very important update. GE Aerospace has delivered its first of 99 F404 engines to HAL for Tejas LCA Mk1A fighter jet, which was long pending since 2 years due to supply chain disruption seen at GE Aerospace. On back of this, JP Morgan has given an overweight rating with a target price of 4,958 per share. Hence, both these stocks remain in focus today, surging higher in trade.
Okay, Upasana, thank you so much for that. Now, let's move on and actually let's stay with the defense space. We spoke to Baba Kalyani, Chairman and Managing Director at Bharat Forge, who spoke about the recent contract signed with the government for the manufacturing of artillery guns. Listen in to what he had to say.
We've signed the contract. Roughly it's about 7,900 crores, and we get 60% of that, about 4,100 odd crores, roughly. And official timeline to execute it is 3 years, but we can execute it much faster than that. So, we are just our team is just working out the process. And as you know, we have a very large capacity to make artillery guns, so we could finish this whole business in 2 years' time once the first stage approval is done. 4,000 guns would be roughly about 70,000 crores, something like that.
And another company in focus is now Zen Technologies. Now, that has secured a large order from the Ministry of Defence worth around 152 crore rupees. Earlier today, we spoke to the management. We asked whether he saw a scope for Indian companies in Europe in a rearmament plan, as well as what he had to say. Let's listen into that.
So we definitely think there is a big scope for us, especially because they perceive they would like to have training for all kind of war systems, including their potential enemies' war systems, and of course drone and anti-drones also. As we speak, actually one of our subsidiary does supply some drone components to or planning to supply some drone components to Germany, and we think this is a big thing. I was actually kind of surprised that they set up almost 800 billion euros for procuring from the European defense companies. And Zen is, trying to get a piece of that action. And, as we speak, we are trying to connect with European counterparts whom we can, probably help in achieving their objectives.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere, because after the break, we'll get your views from Madhu Kela of MK Ventures, our guest editor for the day. Follow on the other side. Welcome back to Business Lunch on CNBC-TV18. Now let's move on. And Madhu Kela of MK Ventures joined in as our guest editor for the day. And he believes that even in the market, it could possibly, and one could possibly get to see a return of 15 to 20%. He's also very bullish on the pharma sector. Listen in.
I would once again request that people must not extrapolate what has happened post-COVID in terms of return, in terms of finding multi-bagger opportunities where money has gone from 10 to 100 times, right? because the lows were so drastic, the returns were fabulous, right? So I don't think that we must expect those kind of returns. Having said that, I am not in a camp that the bull market is over and this is the beginning of some bear market. In my view, 15 to 20% kind of return is still in these markets. The total size of the global pharma industry is $1.5 trillion. And we are still, let's say, 6 lakh crores. In terms. So it is still very small. So I am quite positive that, over the next 5, 10, 20 years, this industry has a lot of legs. We are still dependent on China for basic stuff like solvent, starting material. When all of that shifts to India, which I think will happen in the next 3-4 years, because see, if you are a global major and if you are placing your bet on India, India is still sourcing those material from China. So that to that level, your cost competitiveness is not established. But Prashant, this is all work in progress, in my opinion, and we are in the right direction.
And Madhukela also quizzed the management of CDMO sector players, Laurus Labs, as well as OneSource Specialty Pharma, to understand the market opportunity for such companies and how they are planning to capture its potential. Listen in.
The amount of opportunity in front of Indian pharmaceutical companies in CRDMO is multi-billion. Your number says it is over 8 billion in the next 3-4 years. The opportunity in, I would say, fragment this into two buckets. One is research and development, and the second one is development and manufacturing. People have to invest $3-4 billion capex to capture that $3-4 billion opportunity. So the opportunity is very large, provided our investments are also very large. Biosecure Act comes or not, the need for large molecule, large capacity for small molecule has increased significantly in the last 5 years. So business is there for Indian companies, whether Biosecure Act is going to affect or not. In the, say, medium term, we expect our generic, that which means both API and formulations, will contribute still 50% of the revenue. And CDMO and our biologicals will contribute the rest of the 50%. So from 70% generic revenues right now, in the medium term, we expect our CDMO will grow to 50% of our total revenue.
Compliance record has been stellar. And yes, this is important in pharma more generally, but in CDMO, it is absolute critical, because that's what customers, global customers, Indian customers, any customer comes to a CDMO for really that compliance track record. And we in the group, and that's been the group's DNA, with a very, very clear focus on quality and compliance. I mean, starting with specifically drug-device combination, and GLP-1s are part of that. We are fairly unique as we offer. We are among the very, very few, even globally, offering end-to-end solution for drug-device combination, including GLPs.
And let's move on. And the stage is set. The leaders are ready. News 18 Rising Bharat Summit 2025 brings to you thought-provoking conversations, groundbreaking ideas, and the voices shaping tomorrow at Bharat Mandapam, New Delhi. Be there, scan the code, and get your passes now. April 8th and 9th, save the date. Welcome back to Business Lunch on CNBC TV18. Now moving on to some international news updates and developments that we have for y'all. A while ago, central Myanmar was hit by a powerful 7.7 magnitude earthquake. Tremors were felt as far as Thailand's capital Bangkok as well. The country was also hit by a strong aftershock of 6.4 magnitude around 12 minutes after the initial quake. While rescue efforts are still underway, Myanmar officials say that there is no information so far in terms of the casualty count. Okay, on that note, we're absolutely out of time on this edition of Business Lunch at CNBC TV18. Thank you so much for tuning in. As of now, the Nifty is just around the 23,500 mark. Keep an eye out on that. Up next, your Midcap Radar.
What happened in 2024 with the election of Donald Trump is that the world is not going left or right, but America is turning inward for the first time.
Is US exceptionalism ending? Do you see the US market topping out?
Donald Trump and his MAGA crowd are going to learn a very hard lesson in economics. When economics meet reality, economics is going to win. It's just, it's like when the Titanic hit the iceberg won. The European markets are all at lifetime highs. So there's something going on in Europe. There's a very old saying in Germany, which goes as follows, that a lot of Germans don't believe in God, but every German believes in the Bundesbank.
Are we in for a chaotic period in the near term in markets?
I think as Aldous Huxley described in his famous book, A Brave New World. I think that's the reason I said that the world has shifted on axis. So it requires us to have new hats, new thinking. I do not believe in particularly the wealth created through gold or through real estate or through any other asset class. Equities long-term always deliver a superior rate of return.